Hello and welcome to AI Market News by LM. Today, we're diving into a really wild story. What happens when a single idea, a single fear, can wipe out billions in market value literally overnight? Well, that's exactly what just happened, as a wave of anxiety about artificial intelligence slammed into a corner of the market we might not expect, leaving investors asking, is an entire industry about to be disrupted out of existence?
So let's set the scene. It was February 11th. For most of Wall Street, it was business as usual. But under the surface, in one specific part of the market, commercial real estate services, a little tremor was about to turn into a full-blown earthquake.
And I mean, just look at these numbers. It was a bloodbath. Major players like CBRE, JLL, and Cushman & Wakefield saw their stocks just fall off a cliff. We're talking double-digit drops, 12, even 14%. This was their worst single day since all the chaos back in 2020. So what was the culprit? A housing crash, bad earnings? Nope. It was a single powerful idea, artificial intelligence.
Yeah, this wasn't just some random market panic. This is a specific phenomenon, it's got a name, and honestly, it's spreading like wildfire. Let's talk about the AI scare trade.
So what is this AI scare trade? Well, it's pretty much exactly what it sounds like. It's this massive wave of selling, and it's driven entirely by fear of disruption. Investors are basically looking at the entire market, pointing at established industries, and asking one really brutal question. Could AI make this whole business obsolete? And if the answer is even a maybe, boom, they're selling first and asking questions later.
So, who's in the crosshairs? Market commentary has pointed out that it's businesses with two specific traits. They're super labor-intensive, and they charge pretty high fees. Think about it. Any industry that's built on having lots of people act as middlemen, well, that's now seen as a prime target for AI to come in and automate everything.
And let's be clear, this isn't some brand new fear that just popped up. We've actually seen this wave move through the market pretty methodically. First, it came for software stocks. Then, the fear jumped over to finance, hitting areas like wealth management and insurance. And now, as we just saw, it's landed squarely on the real estate services sector.
So this all leads to the million-dollar question for us, right? Is this panic justified? Is it a real warning sign of a massive disruption that's just around the corner? Or is this just a classic case of a massive fear-driven overreaction?
Okay, to even start to answer that, we have to look at the other huge news from that exact same day. Because, and this is where it gets interesting, while one part of the market was freaking out about AI taking jobs, the US economy was busy doing the exact opposite. It was creating them. This is a classic market contradiction.
Right, so on the very same day all this AI fear was taking hold, the latest US jobs report dropped. And the number? The economy added a stunning 130,000 jobs. And listen, this wasn't just a little bit better than expected. It was double what the market was forecasting. Just wow. This points to a labor market that is fundamentally strong, super resilient. And that creates a major conflict with the whole AI is taking our jobs story that was causing so much panic in those real estate stocks.
But wait, the story doesn't stop there. A jobs report this strong doesn't just, exist in a vacuum. It sends these huge ripple effects across the entire global market. And the first stop, the Federal Reserve.
So here's the logic, right? If the economy is running hot, the Fed has very little reason to cut interest rates. I mean, why would you stimulate something that's already doing great? And this simple expectation immediately sent government bond yields climbing higher. And when US bond yields go up, the US dollar almost always follows suit.
And we can see the impact right here. The market's hope for a rate cut in June, it just absolutely cratered. Before this report, it was pretty much a done deal. Afterwards, traders priced in less than a 50% chance. The goalposts for when we might see easier money, they've just been moved, big time.
And this played out so clearly in the currency markets. A stronger US economy, the idea of interest rates staying higher for longer, that's like rocket fuel for the US dollar. We saw the dollar-yen exchange rate especially get thrown around with a ton of volatility right after the news.
So the main takeaway here is really simple. A stronger dollar is flexing its muscles on the world stage. As we can see, it surged against the Japanese yen, pushing towards that 153 level, and it also put a lot of pressure on the euro. This dollar strength is a really key dynamic for us to be watching right now.
Okay, so this brings us right to the heart of the market's current dilemma. We're literally caught in this massive tug of war between two powerful and frankly, completely contradictory stories.
So how are investors feeling about all this? To get a vibe check, we can look at something like the CNN Fear and Greed Index. It basically tracks a bunch of different market factors to see if people are acting out of fear or out of greed. And right now, it shows a market that's just stuck right in the middle, not really leaning one way or the other. It's a market that's basically defined by uncertainty.
And this really lays out the two competing ideas perfectly. On one side, you've got the macro strength story. It's backed by hard data, like that incredible jobs report, telling us, hey, the economy is solid. But on the other side, you have the AI disruption story. This is a powerful, forward-looking narrative that's causing very real, very painful sell-offs in certain sectors today.
So where do we go from here? Well, the market is desperately looking for a tiebreaker. Taking a quick look at the economic calendar on investing.com, the next clues could really come from anywhere. We'll be watching for things like upcoming speeches from officials at the European Central Bank, for example, just to get a sense of where global policy might be headed. Honestly, any new data point could be the thing that tips the scales. And that leaves us with the one critical question that really defines everything for the market right now. Is it being driven by the real, tangible strength we see today, or the intangible but powerful fear of what might happen tomorrow? Figuring that out is the key to navigating everything that comes next. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Let us know what you think in the comments, and don't forget to like and subscribe for more explainers.